What's going on, everybody? Majid here. I'm going to tell you in this video why credit is so important here in the US. And if you know how to leverage that, you can get yourself high amounts of funding, like $100,000 to $250,000 at 0% interest. A lot of people say cash is king, but in fact, in the US, we're going to talk about why credit is king and how it's so important to know how to leverage that so that you can achieve your financial goals faster, whether you want to start a business, invest in real estate, or grow an existing business. So let's take a look at the details here together, and we're going to go through this step by step. We're going to start talking about credit. We're going to talk about what it means to have a strong credit score, how you can do that, and how you can secure high amounts of funding by leveraging that in the right way. All right. So I'm sure you've heard people say cash is king in the past. So don't get me wrong, cash is important and it's great to have when you need it. But in this video, we're going to talk about why credit can even be more important than cash. And in fact, in the US, understanding the credit system and how you can leverage that really makes credit be the king of being able to, take on more opportunities, get access to capital, and be able to make some big moves. So we're going to talk more about why credit often matters even more than cash, and what are the criteria, and what does it mean when somebody says that they have a strong credit score. So a strong credit score here in the US basically means that you are a reliable borrower. So when banks look at your profile, they're trying to decide if you're somebody that, you have a past good record, paying stuff on time, having a strong credit profile, and we're going to talk more about exactly what that means and how your credit score is calculated. So in essence, credit is basically how trust is measured, right? This is how banks are going to decide if they're going to lend you money for a loan or a line of credit or a house or a car at a reasonable interest rate, or if they choose not to do it at all. So cash tends to be finite, right? You have to work for it. You have to pay taxes. So trying to save up your own money if you want to, maybe start a business, or if you want to step into entrepreneurship, buy a property, it's going to take time. It'll be, you can do it, but it's going to be likely somewhat slow. Whereas credit is where you're able to access capital, debt, but you can do it faster. You can access, high amounts without having to wait and be able to save your own money. Credit is also scalable. If you have a business that is doing some strong revenue, you can access more and more capital as your business grows. And using it strategically, it can be key for somebody to achieve their goals and financial targets much faster. So now we're going to talk a little bit more about what does it mean when somebody has a credit score? How is that calculated, right? So there's 5 factors that come into play here when we're trying to calculate our credit score. The first is the types of credit that you have. So having just, let's say, a 650 or 700 plus credit score, there's much more that goes into it than just the score itself. So the types of credit that you have, whether it's mortgages, student loans, credit cards, having a nice mix affects 10% of your score. The other factor is your payment history. So that's up to 35% of your credit score. So if you have a late payment, for example, or you're not making a payment on time, it can affect your score a lot. You can see here, 35% is quite a bit. Now, looking at the amount owed, so this is where if you have, let's say, a credit card and you've maxed it out, and you have, let's say the card has a $10,000 limit on it, and you use all that 10,000, your credit score is going to go down. And this is something that is one of the easiest ways to improve your score, by just paying down the balance. Generally, keeping your balances less than 30% will not affect your score. And I recommend if you can keep it less than 10% and just be paying it off consistently, that's going to have an even better impact on improving your credit. New accounts. So banks don't like to see you going and applying with a lot of different lenders before you come to them and you're trying to apply for a loan or a line of credit. And of course, the length of history of your credit. So this is, for example, if somebody has only had credit in the US for, say, 2 years versus somebody that has had it for 10 years, that's also going to impact your credit score as well. So, what are the downsides of having a low score? Having a strong credit score can be the key for having a much easier financial life, right? It can be the difference between getting a home at a 6% interest rate versus an 8% interest rate or a 9% interest rate. And we're going to talk more about what exactly that means in numbers on the next slide. But if you have bad credit, if you've missed a lot of payments, if you have collections, if your credit score is, let's say, 550, 600, you could even struggle with getting approved for personal credit cards, car loans, or even a mortgage. You might have to, pay much more in interest for the same loan that somebody can get at much better terms. So, having a low score has some significant downsides, especially here in the US. Let's take a look at an example here. Let's look at the numbers, right? So let's say somebody wants to go and buy a home, and let's say they have a credit score of 524, right? To buy the same home that's worth 250,000, that's the asking price for the property, it's going to take $1,580 a month in payments at a 6.5% interest rate over 30 years. So that means that over the life of the loan, that person would be paying about $318,000. Whereas if we look over here at, let's say, your guy that has a strong credit score, right? His monthly payment is only $1,100 a month. Total interest on the loan, he'll pay about 175K. So over the life of the loan, it's almost $150,000 difference that it would cost somebody by having a low credit score. So it really does add up, especially if you look at the difference in the total, because this is all opportunity cost, right? This is money that you could have kept in your pocket or used it for something else. Yeah. So if you have a strong credit score, what are some of the great opportunities that exist out there? So one of the factors that you want to keep in mind is that if you do have a strong credit score, you can get yourself high amounts of funding at 0% interest. And that's exactly what my team and I do for our clients. And this can be done for any type of business, right? Even if you're wanting to start something fresh, you can secure high amounts of funding, but you need to have a strong credit score above 700. And I'm going to talk more about what a strong credit profile looks like. For example, if you had a med spa business, this client of ours, we got him $240,000 in 2 months at 0%. And, it can be really impactful. Let's say you're a real estate investor, you want to buy more properties. Having a strong score and getting the funding, Arturo got $140,000 by leveraging his credit in the right way. Some pictures of approvals as well. So you can get a variety of different types of funding. So you can get business credit cards, right, at 0% interest. That's one of our most popular products. We also, also it comes to business lines of credit. So low interest rates, we're talking about prime plus 1%, and getting $100,000 to be able to grow a business, right? So this is all possible because if somebody had a strong credit score before applying, before working with us, and yeah, so it really can make a big difference for somebody. I want to talk to you more about what exactly does it mean when you have a strong credit profile, right? Having a strong credit score is great. being above 700 is great, but if you do want to go for the funding that I showed earlier, um, these are some key factors to keep in mind. So first, you want to make sure that your utilization is low. I recommend less than 10% on each personal credit card you have. Also, you don't want to have too many hard inquiries on your report. No more than 2 in the last 6 months per bureau. Having a nice mix of primary credit cards as well. I recommend at least three. Having five plus is great. Then you're building a nice thick credit profile. Also, having a strong credit mix, like a combination of credit cards, personal loans, student loans, a mortgage, maybe getting yourself a car loan. Having a strong credit mix also helps to improve your score and to have a more fundable profile, so you can get those high limits when you go for the 0% funding. Collective limits of at least, I recommend at least 15,000. Having one card, around $10,000 plus is excellent. Great if you have, between 40 and 80,000 in total limits. And generally what we've seen when you have too much credit, it's actually can be a negative when you're trying to get high amounts of 0% interest. So being somewhere here in the middle is a good place to be. And having a strong credit age as well, 5 years plus is excellent. At least 2 years is what I recommend. Some important details also to keep in mind is you want to turn off your fraud alerts before you do any applications. You don't want to have any negatives like no late payments on the report. Make sure to reduce your personal limits if needed, right? So if you do need to pay down some balances, do that first before making any moves. And another way to improve your overall credit age is by getting an authorized user, and that can also help you to improve your limits. So this is what a fundable profile looks like, to be able to get these high numbers that we saw here, that we get for our clients. And so this is how I would recommend optimizing your profile if you are planning on going for the 0% interest funding. Now, of course, my team and I, we would assign you a dedicated funding advisor that can walk you through this whole process. We do everything for you pretty much. There's a lot of guidance. We answer any questions. If you'd like us to help you to make this happen, check out the link in the bio here on the YouTube video. Subscribe to the channel if you like the content about improving your credit, getting 0% interest business funding. And yeah, if you'd like to learn more, just send me a message here or comment on YouTube. And thanks for tuning in.